Guys, today did not look good for one of my favorite stocks, down almost 15%. Open Door Technologies, ticker symbol OPEN, got crushed. Zillow. Blame Zillow. I'm going to talk about Open Door in this video and why I think this is a potential buying opportunity. I'm just going to say potential because I'm going to give you some information. We got lots of stuff coming up, different catalysts that could be positive or negative for this stock. And I want you to have as much information as possible before you make any sort of investments in the stock market. So stick around. Hey guys, welcome back to the Tip Ranks YouTube channel. I'm Richard Allen. Thank you so much for joining me for another video. We're going to talk about Open Door Technologies because today they were down almost 15% on the day. Now, full disclosure, they've recovered a lot after hours, so that's really good, because the news today that Zillow is laying off 25% of their workforce and shuttering their offers section of their business that essentially is a direct competitor to Open Door. So investors saw that, whether it was on the institutional side or the retail side, they saw that as a bad omen for Open Door, because it came out that more than 2/3 of the properties that Zillow bought with their offers program were underwater. And I'm going to show you an example in the Twin Cities metro where I'm from. I'm going to show you an example of a home that I actually personally looked at because I love keeping up on the real estate market, and I wanted to see the competition of Open Door and how Zillow really is doing a very poor job and clearly did a very poor job of managing their business on that side. I don't know how they even did it as long as they did, but I'm going to show you some sales history from Zillow. So just some anecdotal evidence here of what's going on with Zillow. Okay, so you can see this home right here, priced at $319,900. If you take a peek at the pictures, they look pretty good. This would be a decent rental property in this area. Now, I actually looked at this property. First of all, it stunk really bad. It's terrible. But also, the layout's really weird. It's an older house. It's just a strange layout. There was probably some sort of recording studio or something like that down here. It's just a really strange property. The pictures make it look okay. But when you get in, it's dark, it's dingy. Like I said, it smells. And Zillow bought this home. Now, another big thing is location, right? This picture looks okay. But this home faces a very busy road, 45 mile an hour, very busy road, and it's on a quarter lot. So lots of traffic zooming by. You can't really, if you have kids or something, you can't really have your kids in the front yard. It'd be very dangerous. There's no backyard to speak of. There's a brick patio back there. There's a tiny little bit of a yard back there. You can see it with that one bush. And I mean tiny. I mean, it's a matter of a few feet. So again, no real yard to speak of. Very poor location. Terrible layout. Just not a great home. But if you look at the price history of this home, you'll see price change after price change after price change. But let's go down to where Zillow bought it. Sold to Zillow on April 30th, 2021 for $365,000. And now they've dropped the price over and over again. They tried to list it for $20,000 more than what they purchased it for. And then they continued to drop the price until this point in July, where it was below their purchase price, and then on and on, eventually dropping to $319,900. No wonder they're out of this business. No wonder. Now, if Open Door would have purchased this home, there's a really good chance they wouldn't have offered anywhere close to what Zillow was offering. It was a pretty known thing in the industry that Zillow was offering exorbitant amounts for homes just to gain market share. And they were kind of treating it, I think, as more of a lesson, a learning opportunity than anything at the moment. And they failed. They failed miserably. Now, I say all of this about Zillow because Zillow drug Open Door down today. Drastically. It drug Open Door down today, and it has recovered a lot after hours. If you take a peek at where Open Door went this morning, I mean, it was like a drastic drop. For me, I got excited. I was trying to figure out what was going on. I know that Open Door has earnings coming up. We're going to talk about that soon as well. I knew they didn't really have any news. I was trying to figure out why, and then I started looking at some of the other companies. Zillow drug them down like crazy. Now, I think it's going to stay here or go a little bit above this over the next couple days because they have earnings coming up soon, next week. November 10th is earnings, and it could be hit or miss. The reason I'm saying that is they have some audacious goals for earnings this time. They're trying to double their revenue, which could be kind of iffy, but they're still charted to lose money EPS wise. So if we take a peek at earnings over the last year, okay, let's just go over March, May, August of this year, okay? March, they had a miss. They fell the next day 24%, okay? May, they had a miss. They fell 10% the next day. August, we remember I started talking about Open Door right around August, making some videos about them. They had a huge beat here, 21%, massive day the next day. Open Door moves very drastically off of earnings, up or down. And that's why I'm saying I don't think right now is a buying opportunity. I didn't purchase any more today, even though it fell 15%. Keep in mind, it was up 50-60% over the past, if not almost 80% over the past couple months. It's up a ton, right? Because it dropped into the 14s, 13s at one point. It was way beat down, okay? So it's way up from those highs. It's still up 50% from those lows, okay? So it's something to keep in mind. Even though these drastic moves can happen, it isn't always a buying opportunity for a stock, especially when it's run up so much. If you take a peek at the stock forecast, again, it's still running 7.4% up after hours. Really nice to see. This is a strong buy based on 5 analyst ratings, 4 buys, 1 hold, with an average upside of 50% over the next 12 months. I think it could certainly do that, if not more. But it's really going to be dependent on what we're going to see for earnings. If you look at what we have expected, we're expecting a loss of 1 cent for EPS, but they're expecting $2.01 billion in revenue when they delivered $1.19 billion in revenue for the second quarter. So that's a big change. But I continue to get offers from Open Door for the home that I'm in right now, and they've adjusted. I mean, it's been about since I think I did it in August. Yeah, I think I did it in August. So between August and November, it's been like a $40,000 gap between the first offer and this last offer. I mean, it's all over the board, and it's been up and down, right? So, and it's gone down with the market. I think Open Door is really smart with what they're doing. Now, Zillow, it was great, that for that person that sold the home to Zillow for $365,000, but it was a really poor business decision. I don't think Open Door is making those decisions. Now, do I know that for certain? No, I don't. But I could almost certainly tell you that Open Door would not have purchased that property. And they would definitely not have purchased that property for $365,000. They may have purchased it for $320,000 or $310,000 or $305,000, but they would have done some fixing up. They would have made sure it smelled better. They probably would have painted and done carpet and different things and actually flipped it. Because could it be worth $365,000? Yeah, maybe, if people felt like it was a nice home when they went in it. So I think Open Door is doing a better job with their business right now. I really do. But we'll find out during the next earnings report. So guys, thank you for joining me for another video. I hope you enjoyed this update on Open Door. Let me know if you're excited about this company. Let me know if you bought the dip. If you did, great. I still think this is a great place to accumulate shares for the long term on Open Door, but expect some short-term volatility because they aren't super profitable yet. Okay, they just aren't. And this business, I think, is really going to be a loss leader for a good amount of time as they learn, as their algorithms change, as they offer more services. I think Open Door is going to be around for a really long time, but I think it's a long game. I really do. But I think they're going to change this industry fundamentally. And I think that's a good thing. I really do. For you, for real estate agents, for everybody involved in the real estate market, I think it's a good thing overall. So guys, thank you so much for joining me for another video. As always, if you learned something new or found any value in this video at all, let me know by hitting that like button and that subscribe button down below. And as always, I'll see you in the next one.